Balance. The balance sheet has the word balance in the name to indicate that it must always remain in balance. This means that the formula always remains true. Assets minus liabilities equals equity. The formula can also be rearranged as follows. Assets minus equity equals liabilities, or liabilities plus equity equals assets. Whichever format the formula takes, it must always balance. Otherwise, it indicates that there's been an accounting error made that needs to be corrected. Let's look at an example. The first example is of a balance sheet that is in balance. You have cash of $3,000, so that's our assets. Liabilities of a bank loan of $1,000. $3,000 minus $1,000 is $2,000. So the formula stands up. The numbers add up. $3,000 minus $1,000 equals $2,000. Now let's look at the other balance example. If we have cash assets of $2,500 and a bank loan of $1,000, and we subtract that, $2,500 minus $1,000, that leaves us with $1,500. So we would expect that equity to show as $1,500, but it's showing as $2,000. So something is out of balance. It could be an asset account, it could be a liabilities account, it could be an equity account. Something is missing or something has been entered incorrectly. And this shows us that the balance sheet is out of balance, which means there's an error in our accounting. And this is where the double entry accounting helps us identify errors and make sure that our accounting is accurate. Let's look at some examples of in and out of balance and how much. We have assets of cash $5,500, a bank loan of $1,500. So $5,500 minus $1,500 leaves us with $4,000. And it shows as $4,000. So this shows as $0 out of balance, so it is indeed in balance. This middle example, we have cash of $25 and a computer $300. So our assets are $2,800 and a bank loan of $2,000. So $2,800 minus $2,000 is $800. But our equity shows as $900. That's a $100 difference, so it's out of balance by $100. Third example, cash $3,500, furniture $500 for total assets of $4,000, minus the liabilities of bank loan and credit card of $2,500. So it should show as $1,500 in equity, but it's showing as $1,000 in equity, which means we're out of balance by $500. The balance sheet, again, should never be out of balance. If it is, there has been an error in the accounting. BusinessXP is the fastest and most inspiring training ever invented for future business leaders and entrepreneurs. Discover game-based experiential learning at business-xp.com.